What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. We are doing a monthly and weekly recap. That means that we are looking at monthly, weekly, daily charts here on today's episode. We'll get into some indicators, bonds and yields, also commodities. And notice the theme, it's spooky for Halloween. So don't be surprised if somewhere in this video, I scare you. Let's get into it. What's up? Welcome back to the show. So we know that the Fed's going to be discussing the potential for this reverse easing policy coming next week, which typically means we're going to see increased volatility. During the week, the Bank of Canada, they ended their quantitative easing. They held their rates steady. But if you were paying attention to the Treasury market, they did move notably higher while that was happening. There was a lot of interesting things overall taking place there in the markets. And if you pull up the 10-year Treasury note futures, just take a look at all the volume that has been building these last few trading days. Now, if you just look back to the left of the chart, you'll see spikes of volume, but that's typically during when the contracts change. But if you look where there's other volume spikes within this, and you go back and you just take a look at an S&P 500, NASDAQ 100, typically when we see this, it's not always indicative, but there is been plenty of times where this increase of volume that comes in here typically leads to more volatility within the indices themselves. And if you take a look here at the yields, we're looking at the 30, the 30, the 10, the 5, and the 2-year here. And when we have the spreads beneath us, the 30 and 5 continues to flatten out here. If you haven't heard already, we talked about this in a previous few episodes. Now we're starting to see everyone talk about it, right? And it's going to get you're going to hear more and more about it as these curves continue to flatten. And one of them actually already inverted, the 30 and the 20-year yield inverted, and that's typically indicative of, potential slowing of growth. At least that's what investors potentially expect to see ahead in the future. So needless to say, it's nothing that we need to be super cautious for this specific time period. It's good. It takes time to play out. But it is something that we want to continue to watch and see how it develops. You can see here the 30-year continues to head down. I've been watching the 5, and the 5 continues to hold that area. And you can see here on the TNX, we still have the possibility of this being an inverted head and shoulders pattern. But you can see down almost 6% on the week there. The 30-year Treasury yield, 7% down on the week. So a big move there to the downside. Meanwhile, look at the 5. The 5-year is holding steady on this base breakout. So it's going to be interesting to say the least. And during the conclusion section, I'll kind of give you my thought process because this spells out big opportunities. At least a lot of charts that I've been seeing and posting on the Discord. There's a lot of good setups that are coming from this, but you gotta proceed all of this with a lot of caution because typically during times of what could be large volatility to come, you need to just be very risk aware. To say the least, right? So if you're going long certain stocks, you need to make sure that you have some sort of hedge or potentially just stops in place. Let's get into some monthly charts because it's very hard to be bearish during a time where all the indices are hitting all-time highs, and you're looking at these candles, and this is a large range candle here, up 6.91% for the month of October. Like that's a big move, and look at where it pulled down to on the monthly time frame. That 5 EMA, that was that area that we were watching for a reconnect. And why would we look at that area for a pivot? Well, it goes to show you, look what just took off. Boom, the very next, and it finished at its all-time high. So huge move in the S&P 500. What do you know? An all-time finishing monthly high for the NASDAQ 100, almost up 8%. We'll get into the Faang stocks here very shortly on today's episode because I'm seeing some, and I'm sure other people are seeing the same thing, some very interesting stuff taking place within those stocks. And look at the Dow Jones Industrial, all-time monthly high close right there, almost up 6% for the month of October. IWM still forming a bull flag, up 4%. So this one still has a lot of catch up to do with all the other indices, which I still think there's a big opportunity here. If we start getting above that 230 and we start breaking out To be quite honest, though, it's like, it's almost like everyone's watching this, so I don't know, maybe perhaps we're going to get a fake out trick. I would like to see it come down further, maybe even crack down through this lower range area and then scare off people and then start to rip up. But, it is what it is. We're still range bound. Let's get into some weekly charts, and you can see here we're up in the S&P 500 on top of that upper Bollinger Band right there, but we're disconnected from the weekly 5 EMA. So yeah, if we start getting a pullback, let's start looking for a reconnect there. We'll see where that lands at. Right now it's at 45.15. So yeah, it's like I said, it's very hard to be bearish while price action is reaching to these all-time highs right now. NASDAQ 100 looks very, very strong here too. Look where it tagged the upper Bollinger Band. Sometimes that can act as an area of resistance, but it's above all those key moving averages that I like to look at. Dow Jones Industrials also right there at that upper range of that Bollinger Band, above the 5, above the 30, above the 20, those moving averages. And I want to point out here that this specific chart, if you look at those Bollinger Bands, just look how tightly contracted these are. And typically when you get these periods of contraction, that can lead to a period of expansion. So we're going to continue to see what this develops. But I mean, these charts are pointing to a potential melt up. And we'll get more into detail with that here a little bit later throughout the show. Let's hop over to the IWM. Look at how tight these Bollinger Bands are continuing to contract. Now, what's very important to watch, this is the weekly time frame. If you look at the PMO or even the MACD, looks like it's about to have a bullish crossover right here. It's looking pretty strong overall, right? This could be a massive bull flag. When it comes out, we could very well see just a very, very big base breakout, but we need to obviously proceed with caution. You need to manage your risk and so forth. But so far, it's looking good. We'll get into these daily charts right now. This is very important, so pay very close attention. Let's go ahead and... I told you I'd scare you. Did I scare you? I did. I know I did. You probably threw your phone. You're like, nah! Yeah, okay, let's go back into the S&P 500 here on the daily time frame. We broke down through this wedge. We had this inverse head and shoulders. We're probably one of the few channels that were talking about the possibility of this and being an inverse and breaking out. And that I wasn't expecting a strong move like that, but that's exactly what we got, a very strong move to the upside. And yet we haven't retested this specific wedge break down yet. So perhaps, yeah, maybe we squeeze a little bit higher here, because this for sure feels like a squeeze. Without a doubt, we actually closed above 4,600, so quite a big move in the S&P 500. The NASDAQ 100 also finished at an all-time high. What was crazy about this last trading day is we had a big gap down, and then we just ripped straight back up. So very, very strong-looking day. Dow Jones Industrials, take a look here. We broke out, we crashed back down through this area, and then we just elevated right back up to a closing high for the day there. So, just everything's really in bullish context. It's crazy. IWM right here, still consolidating. You can see here we had those 2 days of weakness, but it just jammed right back up, okay? But we continue to go sideways. So we're looking for a 210 breakdown or 230 plus breakout. It's a little bit above 230, but right in that area is where we want to see some volume pick up, and we want to see the small caps continue to scream. Now, let's get into the mega caps. Okay, so we're going to look at these pretty much the Faang stocks. And what's important here to note is just how bullish these charts look. And yes, we have some bearish things going on, which we'll get into on the signal charts and the indicators. I want to just present to you, you got to do what the chart says. Trade what you see, not what you kind of think might happen. Because as it stands right now, things are very, very bullish. And if you're trying to fight that, well, I mean, when is a new high bearish, right? Maybe if it hits the high and then it crashes down forever, right? But typically what you see is a new high, maybe consolidation, a new high, new high, new high, new high. Like that's what's been taking place. Now let's take a look here at the S&P 500 over equal weight. So let me middle this out there. Bam. Okay. So S&P 500, this is cap weighted, basically over the equal weight, right? So it's one, you can look at this and you can just say, okay, so if it's cap over equal, this is pretty much looking at mega caps over small caps or smaller companies. And when you look at this ratio, when this line goes up, that means the S&P 500, the cap weight, and really it's like the S&P 7, right? The Faang stocks are outperforming the equal weight, which is the smaller companies. So when it goes up, it means mega cap is performing. When it goes down, small cap is performing, okay? And this right here is on the daily time frame. This could very well be the early start of an inverse head and shoulder breakout of this specific relative strength line, which means, doesn't mean that they can't both go up, but what this shows me is that mega cap is in a stance to outperform these smaller companies still at this specific point. If you look at even this on a larger time frame, the monthly time frame, look at, we had this area of resistance here, we broke out, boom, like the oh my gosh, mega cap tech stocks, you know, we're really outperforming strongly. Then we had this pullback right back to retest, and now we're starting to bounce from that area. So that retest was in confluence with the 50-day moving average. So these big tech stocks still look like they're in a place to perform. Now, if you remember the other previous episode, we talked about what the options market was pricing in for Amazon and Apple and various other stocks. And you can see here, look where Amazon pulled into, right where the options market was basically pricing in. And then guess what took place? Well, they rallied from that specific area. If you look at Amazon or Apple, look, I mean, this couldn't even take down the market. Like, that's a big move to the downside in both Amazon and Apple, a big, huge gap down. This still finished down 2.15% on the day. And then look at that rally back. So it's an insane rally back there. Same with Apple. Apple tagged that upper range of that move that we're watching in the options market as well. And then on the reporting on the earnings, you can see a big move down to the downside, and then it rallied right back up to where the open was on the previous trading day. And, you know, let's take a look at a couple other big market cap stocks. Facebook is still really forming this tight falling wedge pattern. I took a position in Facebook personally on this day right here on this low over here. And well, we gapped up, you know, I'm up a little bit, but this, we don't know. I mean, the chart looks horrible, right? Right now I'm just trying to look for a potential bounce opportunity, but you know, you have the 50 crossing down through the 100. You have all the intermediate term 20, the shorter term 20 period moving average down, and we're just floating around a rising 200-day moving average. So it's going to take a lot of work to repair this. However, we've seen crazy things, right? We've seen, you know, times where it takes the, you know, stairs down and then the elevator right back up, which is typically the flip. Now, why are things so bullish right now? Let's look at weekly time frames. So for example, Google is up, what, 70% plus for the year? 2021, it was here. Now it's that's a big move, right? 2021, 1,700, and it's darn near touching 3,000 right now. But we had a base breakout on the weekly time frame with a big bullish candle, and look at the volume that stepped up. That's a big, big, big move for a big, big company. And then Microsoft, come on. Are you serious? Base breakout, huge volume. Things are getting very, very euphoric here. And I must say, Tesla is just absolutely insane. And this is 100% a complete gamma squeeze that'll could last a little bit longer, but I would expect an unwind here soon. So be very careful. If you're still bullish on Tesla up here, make sure that if you're trading options, make sure that you're putting some sort of hedge against those calls and being very, very careful here. But if you look at this on the daily time frame, we gapped through this area right around that 900 marker, and it's just been rallying, ripping, and then the upper Bollinger Band has been holding that support. Look at the RSI, it's above 90, it's at 92.16. So yeah, this thing could press higher, but oh man, be very, very careful here, because if you're just buying a call or doing something like crazy like that, you know, just be mindful, be careful. But these are all positive developments taking place overall on these big cap stocks. So the volatility that might come next week due to this, you know, the market, the Fed, potential easing, that's all a real possibility. So this could all be what's known as a bull trap. So it brings in all the bulls, everything's good, and then it kind of reverses. However, given the context of the chart and looking at price overall, yeah, we might see some weakness, but look at these key levels, because the market might respond very well to these. So like I said, you know, for example, Microsoft broke out. Yeah, if this reverses and comes back down to 310, people would be a little bit scared. However, it's still not far from its all-time high. That's a positive sign. And that wouldn't even be a complete retest of this base breakout. And if it gets the retest, that can also act as an area of support. Once resistance is broken, it then can become an area of support once it's tested. Okay, so yeah, we have a lot of volatility, a lot of things going on in the overall markets to be very cautious for. So in the conclusion, I'll tell you what kind of my plan is. Let's look at another chart. Netflix. Oh my gosh, come on. Weekly time frame for Netflix. This thing just keeps ripping. Is it getting overbought? Yes, it is. And it broke out of this base around 575. So if this comes down from 700-ish, right, down back over here to back test, people would be like, oh yeah, the market, because these big stocks, right? But you want to be aware that these mega cap stocks, if they pull back and they just retest, that's not bearish. That's bullish. And then it can continue that move higher. So just be mindful of that. If we see increased volatility, if we see the market come off from its all-time highs, you want to be aware of where these big cap stocks are heading, because right now they're still screaming higher and things could last a very, very long time. Especially, we don't know what the Fed's going to do yet. Okay, Nvidia, are you kidding me? Look at weekly time frame. Come on, it was up 12.5%. Is it overextended? I mean, yeah. It is. Can it come back down? Yes. But some of the biggest advancements come in overextended territories. Okay, so just and some of the biggest breakdowns come from overextended to the downside, oversold conditions. Okay, but what happens here? Say we're up at 260. If it dropped down to 230, I think that obviously a lot of people, especially retail traders, they're gonna be scared, and they're probably not looking at this on a weekly time frame, or even if it comes back to touch the 20 weekly moving average, like they might I don't want to touch this anymore, but that might be the time to actually get in. So yeah, as people pile in, or if this gamma squeeze continues to perpetuate itself to the upside, you can know to be very, very careful during this specific time. However, if we start seeing things reverse, you need to be ready to pounce, because typically these stage 2 markups where you just get the market rallying and rallying, you want to be prepared to find these pivot points to go long. And as it stands right now, like I showed you on this chart and I showed you on this chart, big tech is looking very bullish. And until that changes, you need to just trade with the price. Let's get into some stock market indicators, okay? These are shorter term indicators, and they also kind of suggest that volatility can pick up. This is the sell signal I use, right? The 10-period moving average, when it gets below this 0.8, that's a warning sign. So we got that warning sign. We talked about it. It looked like it was about to cross up. It didn't cross up through it. So we got the warning sign on. Now look at the purple line, right? That is the CPC on the daily time frame, and it starts to spike up a little bit. If that can take up or continue to move up, and this line here crosses back up through 0.8, that is that quote-unquote sell signal. Does it mean the market's going to crash? That's not what it means. What it means is to make sure that you're taking profits if you're in the green, right? Or elevating your stop loss, finding a way to protect your gains, right? If you have stocks that are up 20, 30%, how are you feel if those go down on you and all of a sudden they become a loser? That would be absolutely miserable. So that's kind of what this indicator tells me. So we're not there yet, but it's coming up. NIMO, okay, we have a negative divergence here. The market's pressing higher. The Naizi-McClellan oscillator, it's tapering down. Okay, that's not a positive sign in the short term. The NIMOT, it's just a different calculation. This is the traditional McClellan oscillator. And you can see here the negative divergence right here on the New York Stock Exchange. It played out. We talked about that, moved to the downside, and it's still pointing down, and it might have more room to go down. We don't know yet. The VIX, which is very interesting here, looking at the 30-minute time frame for volatility. Although the market's pressing higher and higher, look what volatility is doing. Volatility is just elevating. It's literally putting in a low, higher low, higher low, higher low, high, higher high, higher high, higher high. So, it's a very weird thing taking place in the markets, especially with all the noise and the narratives that are currently out there. The best indicator, it's price. The second best is volume. And that's, some people would agree, some people would disagree, but those are my favorite. S&P 500. We talked about it getting very overextended to the downside, the percent of stocks above the 50-day and the 200-day moving average. Guess what? We call that right here. Bam, boom. But we just looked at the prior times that happened, and it went boom, boom, bam. All right? Now, what do we see? Well, percent of stocks now, it's above the 50-day moving average. So 61% of the stocks in the S&P 500 are above the 50-day moving average. 72% of the stocks in the S&P 500 are above the 200-day moving average. Now, as the market is at all-time highs, take a look here at the percent of stocks. They're actually lower amounts than we were back here in August and September. So there's a little bit of a divergence taking place there, but nothing crazy, but it is still worth noting. If this market wants to continue to press higher, you're going to need more participants playing. And what this does tell me is that, okay, that means, once again, the big tech growth, the big mega cap stocks are the ones really holding this market together right now. NASDAQ 100, very similar story here, that negative divergence on the percent of stocks above the 50-day, as well as the 200-day taking place right there. Let's take a look at the lumber to gold ratio. If you don't know what this is, you can watch my interview with Michael Gayad. He explains it in much more detail, or you can read his white paper. Still in a risk-on environment. However, lumber backed off quite a bit this past week. Is like down 7% or so. I can't remember off the top of my head, but a big come down. Meanwhile, gold's kind of floating sideways to slightly down. That was on Friday. Still above zero, but if it crosses down, that's kind of where you want to say, it's raining outside. Maybe I should slow down. Maybe I shouldn't drive so fast. Another way in investment terms, it basically says, hey, maybe I shouldn't be completely, long all these specific stocks or pressing so hard and all my risk is kind of like out the window sort of thing. S&P 500 here, we're going to look at the bottom half of the chart. This is the NIM, and if you didn't watch my YouTube short, I explained what this was in a little bit more detail, so I'm not going to do it on this video just because of a time thing, but we are at 103.35. Okay, a couple ways to read this. This is extremely bullish. What are asset managers doing? They're very bullish. The RightX, where's money being placed? Well, it's 0.07. That's also very, very bullish. Okay, this is a sentiment indicator, right? And it could be used as a contrarian indicator too. It doesn't time the market, but it's another tool to use. So one way that you can look at this is like, okay, it's bulled up, full bull, and it's even above 100, meaning leverage in these long positions. So it's a big, big move. That to me means if an unwind comes, this could be a very aggressive move to the downside, right? It can move a lot quicker to the downside. Now, every time that it reaches above 100 in this year specifically, let's take a look at that chart. In 2021, 6 times it has reached above 100. And as you can see, it was this specific day that when the reporting came out, it reports every Thursday, I think, or once a week. And then look what the market did shortly after. It pulled back. Right here, pulled right back. Right here, pulled right back. Right here, well, it hasn't pulled back yet. Will it? Maybe. And each time it actually did that above 100, guess where it pulled back to? The 50-day moving average. And then it continued its trend up. So guess what? Hey, if it happened the last 1, 2, 3, 4, 5 times, hey, maybe a 6 times another time where it's going to maybe move up a little bit more, but then it reconnects with the 50-day moving average. That's that. It's been acting as a strong area of support. It acted as a little bit of resistance. Hey, perhaps we come back down to 4,500 or 4,450, and that is that pivot area. So while people are completely scared, shake some people out of the market, we're smart enough to start looking for those long positions to start pressing into, at least from a good risk to reward standpoint. Now, if you take a look at the NASDAQ, new high, new low, also negative divergence taking place. While the market is at all-time highs, we have new high, new lows at a lower reading. And even with the new high index on the NASDAQ new high, you can see the market's at all-time highs right here, but it's doing so with less support being a negative divergence. BPNDX chart, we're still in that, we're not overextended to the upside anymore, but we're kind of came down. So as the market pressed all-time highs, this actually pulled off a little bit. So what we can look for is a possibility for a negative divergence to build. This is, like I said, not the place where I'd want to be pressing completely long, but it's backed off from its overextended territory. And that same thing with the BPSPX chart as well. And then the last indicator I want to talk about is the advanced decline volume line. The advanced decline volume line, you can see here a high to a lower high. Meanwhile, the S&P 500 went from a high to a higher high. So this is still diverging in itself as well. If you look at just the advanced decline cumulative line, not the volume cumulative line, that is actually floating right around these all-time highs too as well. Slight divergence, very slightly, but that's a bullish development overall for the other advanced decline line. Let's look at the dollar. The dollar, very interesting price activity in the dollar. Look how big that candle is. A huge move on Friday, almost up 1%. So that is bearish for commodities. Commodities got hit with the dollar rise like that. And what's interesting to me and a little bit perplexing is that the S&P 500 moved up too. And you typically get an inverse correlation. So there's clearly something taking place right now in the markets, and we probably are going to be finding out some more clarity coming in to next week's Fed meeting. Okay, so typically, yeah, we came up here at resistance and we started floating down. Guess what? When we went down, the market ripped up higher. This is a big move in the dollar. What did the market do? Well, it just had a big day. So maybe it's a slight delay. We'll see. But look at commodities. Gold, big move in the dollar, big move down in gold, right? Not crazy, right? 18 bucks, that's still 1%. That's a big move. And it's potentially breaking down from this up channel. And if that's true, well, guess what? Gold's probably going to come back down to 1720 or try to test that area if it can't recover here quickly. Overall, though, it's not really in a, bullish trend or a bearish trend. It is in a sideways consolidation. That's what I'd call that. It's just sideways. Silver's holding up okay, down almost 1% on last Friday. You can see here we broke out of the wedge, we came up and we hit the 100-day moving average. Now we're pulling back a little bit, maybe to the 50, maybe the 20. If that holds, this could be potentially a bull flag forming. And if you want to take a little bit deeper of a look, this could be a left shoulder, this could be a head. We can be building out a right shoulder, and the neckline is 25. If we break out there, guess where we go? We go to the top of the channel right at around $28 to $29 there. Copper's going to have to recover if you want a strong economy. Right? Dr. Copper, it's like the economy leading indicator over here is what people say. We broke out and it was a very strong move, but now we're coming back. It's a back test. We haven't broke down fully yet. This is probably a 50% retracement right around there from this move, and that's quite natural. So we need to see this continue to pick up, or there might spell some more problems here in the near future. Okay? But overall, still, it's holding its ground right now. Okay? And then oil. Oil is still in a very, very bullish trend. You can see here it broke out, it backtested, and it ripped up higher. We came where? To the 20-day, which we kind of discussed, and then we moved higher, and then we came back again. We backtested. It's still holding as support. So as long as this continues to hold, awesome, right? We could even break down further, right, and come back a little bit more. That's still not bearish, right? We can come back down to 76. And that, I wouldn't be surprised to see the market do that and just float around this $75 to $80 level for the remainder of the year and even into the next year. But as it stands right now, still within a very strong uptrend. Let's get into the conclusion section. We talked about a lot, and I want to wrap it up by quickly saying this. We're going into next week, so you have to think of this in two ways, right? If you are a short-term trader, all you need to do is just be cautious. That's all you have to do going into moments of volatility, which is that Fed meeting. We don't know what's going to come from it. We don't know how the market's going to respond. You can look for a bunch of narratives, but we got to follow price. Okay? So when that is taking place as an intraday trader, what you typically can do is just lower position sizing or tighten up your stop losses to manage your risk. If you're an options trader and you're bullish on specific stocks, hey, you know what you can do? You can use spreads, and that'll help reduce the amount of risk in individual trades that you take. All right, so you got to just be very, very just aware of the risks that lie ahead. However, from a longer term perspective, some of these things that are going on that we discussed, it looks incredibly bullish, which says to me we might not be over for quite some time. However, you start to look at those yields, the curves. If they come to that inversion, guess what? That can spell fears down the road. So we're not there yet, right? It's a patient thing. We need to be diligent. And that's all I got for you on today's episode. Hope that helped. Hope you have a safe Halloween. And I will see you back here next